All right, everyone. Thank you very much for those of you who are already here. Really, really appreciate it. We will give it about 90 more seconds or so, and then we'll get started. So if you need to run to the bathroom, go get a glass of water like I just did. Please do that now, and we're looking forward to getting this started at around 12:02 Eastern. All right, we're going to call that 90 seconds. Not really, but it's 12:02, and I want to be respectful of everyone who's here. So, appreciate again everyone being here today for our regular weekly webinar. Today, it's the decision framework every real estate sponsor and investor should share with Rodivia Brigham from Propose a Bid. Before we get started, we have our disclosure, which is to say, this is just to make the lawyers happy and say that Camoplan is not an advisor. Um, we want we don't give financial advice or tax advice, so everything here is for educational purposes only. If you are ever going to go make a investment or tax related decision, please do your due diligence and seek out the advice from the appropriate individuals. Also, housekeeping thing is that we will have the chat turned off, but we'll have our Q&A function turned on. So please ask your questions during the presentation. We're going to wait to take questions at the end, but do ask them as they come up. I'll be watching them, and then if it doesn't get covered during the presentation, we'll definitely answer at the end. And then the last thing is, if you have any questions about self-direction and how that works, please reach out to me directly. You can schedule a meeting with that QR code. Today's actually kind of a unique version of this presentation because typically our weekly noon webinars on Thursdays are geared towards Camoplan's client base. Because of the nature of this presentation, I extended the invite to our community of investment sponsors and fund managers who we work with because it's relevant to them too. So, in addition to you being an individual investor who may want to learn about how self-directed IRAs work, Camoplan does a lot to support capital raisers in how you can talk to your investors about using self-directed IRAs in your deals. So whether you're an investor who's new to self-direction or if you're a capital raiser and want to learn more about how Camoplan can help you raise more money from retirement capital, please schedule a call with me or just reach out via email or phone, and I'd be happy to have that conversation with you. So we're going to get the presentation started. Just a little bit of kind of context of why I wanted Rodivia to be on today. I met Rodivia, I think it was back in June. It was at a meetup in the Bay Area, and I was I thought it was a pretty compelling solution that Propose a Bid was offering, and we're going to hear about it today because in this, especially in the multifamily environment, the stakes are pretty high in terms of how you are getting value out of these assets. And this Propose a Bid solution doesn't only apply to multifamily, but the nature of the beast right now is trying to eke out as much value as possible and also protect capital, whether that's your own capital or investor capital. So I thought, this is extremely relevant right now, and it'd be great to have members from both of our investor community and our fund capital raising community to be part of this. So without further ado, Rodivia, the floor is yours.
Thank you, Matt. I appreciate it. Good afternoon or good morning, everyone. Thank you to Comma Plan for having me. Let me share my screen. see. I think it's screen two. How's that look?
Perfect.
Okay, cool. So I'm Rodivia Brigham. I'm the founder and CEO of Propose a Bid, and today we're going to talk about something that I believe sits in the center of responsible real estate investing, and it's how major capital decisions are actually made before the money is committed. So what does that mean? So whether you're an investment sponsor, a commercial real estate owner, or a passive investor, eventually every property faces significant capital expenditure decisions. So, what are capital expenditure decisions? It's an elevator modernization or a roof replacement, probably an HVAC system or a fire and safety. And they are also other major building systems. And while we also often think about those as just like construction projects, they're really investment decisions. And we basically know that. So today I want to take you upstream before the capital is actually moved. So before the contractor is selected, before the contracts are signed, and before the capital is actually deployed, and introduce you to where the decision framework, where we use at Propose a Bid to bring greater structure and clarity and accountability to those decisions. So my goal is that today, you have a major thinking difference about what it actually means for major CapEx decisions to be ready for the commitment before that money is even moved. I've got to get used to moving these slides around. Okay. So this is just a presentation roadmap. So here we're going to talk about the capital decisions and how those are managed differently, not simply as the projects or construction decisions, but as decisions that are being built before the capital is ever committed. So we'll look at where decision risks enters the process, why having multiple proposals, multiple bids doesn't necessarily mean you have comparable choices. What you actually have is just pricing, and how assumptions, the risks, the exclusions, the judgment, and the authority can influence an actual outcome. We'll also talk about why a good capital decision should be understandable even when the original decision makers are no longer in the room. People have moved on, and why some projects stall despite having plenty of informations. And so then we'll bring those concepts together into a practical 6 question readiness test that you can take with you that both sponsors and investors can use. So by the end of this presentation, my goal is to give you a different lens for looking at major capital expenditures or major CapEx. One that not only asks, is this a good project, but was this a well-structured capital decision? So better decisions before capital is committed, right? So when Propose a Bid talks about CapEx today, Propose a Bid is talking about the major investments owners make throughout the life of a property. So for instance, an elevator modernization project, the roof replacement, HVAC, building systems, or any major renovations, we tend to think of these as construction projects. But before any of them become a construction project, someone has to make an actual capital decision. And that's the space where Propose a Bid operates, the decision layer before the capital is committed. So our approach starts by framing the decision correctly. So what does that mean? That means, what problem are we actually trying to solve? It's not necessarily the roofing or the HVAC replacement. The problem could be, for instance, that you want to get the renovations done so that you can sell in the next 3 to 5 years. That's the problem you're trying to solve. Or you want to do a rent increase of 5 to 7%. So then we look at whether the alternatives that you're evaluating are true comparables, right? So we surface the assumptions, the exclusion, the responsibilities of the ownership, the risks, and the judgment calls that could materially change the actual outcome of the project itself. And then we clarify who is advising, who is having the authority to make those decisions, and then ultimately who owns all of that risk. And then finally, we make sure there is a clear rationale that allows for ownership to understand how and why decisions were reached in the first place 2, 3, 5, 10 years ago. And that's what I mean when I talk about decision architecture. It's not about producing more project information, right? It's about structuring the information, the judgments, and the accountability around a major capital decision so that ownership can make those decisions with greater clarity and confidence. See if I can get to, okay. So every capital decision requires some sort of structure. So whether you're talking about a $300,000 roof replacement or a multi-million dollar elevator modernization, the technical project may be completely different, right? And the major property repositioning can be different also. So the amount of capital may be different, the contractors, the stakeholders may be different, but the discipline required to make a strong capital decision shouldn't change. Call it the master. And that's the foundation of what we call the pre-commitment decision architecture. So before you commit that capital, what is the decision that you're making? So before the capital is committed, we want to know that the decision itself has been properly constructed. Have we framed the actual decision we're trying to make? Are the alternatives we're comparing truly comparable? Have we surfaced the exclusion, the unknowns that could change the actual outcome? And is it clear who is advising, who is recommending, who has authority to decide, and who ultimately owns all that risk? So those disciplines matter because selecting a contractor is only one piece of a much larger capital decision, right? A project can have good contractors, engineers, and plenty of information, and it can still produce a weak decision if the decision itself wasn't properly structured before the capital was actually committed. Oops, clicking too fast. Okay, right, here we go. So the two perspectives and one shared responsibility. So I had to think about this too. So sponsors and investors may sit on different sides of investment, but they're ultimately connected by the same capital decisions, right? So what they don't share is the same role, obviously, in making those decisions. So the sponsor is responsible for executing the business plan and they're evaluating alternatives, exercising the judgments, deploying the capital, and ultimately making decisions on behalf of the asset, on behalf of the property. So the investor isn't there to select the contractor, or determine technical scopes, or manage the actual project. They shouldn't actually have to do that. But investors should be able to understand how and why significant capital decisions were made in the first place, not only this investors, but previous investors or future investors. So what information was actually considered. So, for instance, what alternatives were evaluated? What risks or trade-offs influenced the actual recommendation? And was there a disciplined rationale behind the deployment of the capital in the first place? So that's an important distinction within the decision architecture that you need, which is responsibility and authority needs to be clear. So the sponsors make and executes the capital decisions while the investors evaluates the stewardship behind it. So when the decision is structured, is it explainable and is it traceable? And in that, it helps protect the assets while strengthening confidence in how capital is actually being managed on that property. So now we'll talk about why great real estate investments still underperform. And that sounds super generic, I know. We'll talk about it propose a bid style though. So when we evaluate a real estate investment, we spend a tremendous amount of time underwriting that acquisition, and we definitely should. So we analyze the purchase price, the cap rate, financing, and projected returns because those factors help us determine whether that opportunity actually makes sense. But then there's the distinction I actually want to make in that is that underwriting the acquisition is not the same as underwriting every decision that will follow it. So a property can be acquired at the right price with the right financing and a strong business plan and still face those significant decisions that were impossible to fully anticipate at the closing. So the acquisition creates an opportunity, but it does not guarantee that outcome. So then comes the years of capital decision, right? So what does that entail? So after the closing comes something we don't always talk about with the same level of discipline, which is the years that come with the capital decisions. So do we repair a system or replace it? Do we make the investment now or defer it? Which scope actually solves the problem? Which approach best supports the business plan, right? Which vendors should we select, and which risks are we willing to accept? So, from Proposal Bid's perspective, these aren't isolated construction questions. They're actually a series of capital allocation decisions. And before each one becomes a project, someone has to frame the problem, evaluate the alternatives, and interpret the competing information and make judgments about the risks, the trade-offs, and ultimately decide whether the capital should be committed. And that's the decision layer that exists before any execution begins. And the actual asset performance, right? So this is where these decisions eventually show up in actual performance, in the cash flow, the risk, the asset value, and the investor's returns. And these aren't only influenced by what you paid for the property acquisition, they're also influenced by the quality of the capital decisions made throughout the actual ownership. And that's why the decisions focus on upstream before the capital is committed. So the question simply isn't, can we execute the project well? It's, did we construct the right decisions to execute in the first place? Because a project can be executed exactly as approved, still produce poor investment outcomes if the underlying capital decisions was weak in the first place. So the acquisition creates the opportunity. The decisions that follow help determine what the opportunity itself ultimately becomes. So execution risk isn't the only risk, right? So when we think about risk in a capital project, we tend to think about what can go wrong during the execution, cost overruns, schedule delays, contractor performance, supply chain issues, or the unexpected field conditions. So those risks are real, but there's another category that can go wrong during those. And that is before the construction ever begins, that we execute anything, we've already made a series of judgments. So those are the risks. So we've decided what the problem we're solving. is. We've decided which information we actually want to rely on. We've accepted certain assumptions and exclusions and trade-offs before the capital was even moved. And we relied on the recommendations from different experts. And eventually, someone makes the decision to commit the capital all at once or in stages. So if those decisions aren't properly structured, then the execution can't necessarily fix them. So a contractor can perform exactly what was contracted, and the owner can still discover that the wrong scope was approved and an important exclusion was missed. Maybe two proposals weren't exactly comparable, or an assumptions returned and turned out to be materially ineffective, right? And so that's one of the central ideas behind the decision architecture, which is project risk doesn't begin when construction starts. Some of the most consequential risks enters the project before the capital was even committed at the decisions stage of the project. And so for module three is the questions behind every major capital decision. So there's typically three tests that Proposabit likes to perform. So before significant capital is actually committed, Proposabit believes every major capital decision should pass these three tests. And it's, are we solving the right problem? Are we comparing the right alternatives? And can we defend how we got here years and years later? So these sound like simple questions, yes. But underneath each one is a different discipline within decision architecture. And together they force sponsors and investors to look beyond whether a project is needed or whether we have enough bids. So they ask whether a decision itself has been properly constructed in the end. So let's take a look at each one separately, because this is where we begin moving from simple managing of a capital project to actually managing the quality of the decision behind that project. So are we solving the right problem? So the first test is the framing, the decision framing. Are we solving the right problem? This is foundational because the way we define the problem determines which solutions we evaluate. So imagine an elevator that's becoming increasingly unreliable. Is a decision to repair it or modernize it or replace major components or extend its useful life cycle? Or is the larger question how the actual system needs to be performing over the remaining hold period of the asset? So those are not necessarily the same decisions, and assumptions can begin to shape that decision before we even recognize their assumptions. If we frame the problem incorrectly at the beginning, we can hire excellent engineers and receive the competitive bids. We can select a qualified contractor and execute flawlessly and still deploy capital against the wrong problem. So a well-executed solution to the wrong problem is still the wrong investment. Are we comparing real alternatives? So the second test here is, are we actually comparing real alternatives? And so this is where we like to call input equivalence and judgment variables becomes important. So owners often receive three proposals if they're lucky. They put the prices next to each other and naturally begin comparing them. But three proposals do not automatically represent three comparable choices, right? So one contractor may include work another excludes. One may assume electrical upgrades are included while another assigns them back to ownership to get those subcontractors, right? Warranty, schedule, allowances, existing conditions. And risk allocations can all differ between those contractors. So before we ask which price is better, we have to ask what does each price actually represent? Excuse me. Our job is not to force every alternative to be identical. It's to make the differences visible enough that we're comparing them intentionally. Otherwise, what looks like a price decision may actually be a scope, a responsibility, or a risk decision that we haven't actually recognized yet. And then can we defend how we got here? So that's the third test. So major capital decisions involve a lot of people: engineers, consultants, contractors, property managers, asset managers, ownership, sometimes boards or even lenders. But there's an important distinction. Expertise, recommendation authority, decision authority, and owner risks are not the same thing. An engineer may provide technical expertise, and a contractor may recommend a solution. The asset manager may make a recommendation to ownership, but ultimately someone has to exercise judgment, authorize that investment, and own the risk of that decision. So the decision architecture makes those boundaries visible and preserve the rationale behind that one and final choice. So if someone comes back 2 or 3 years from now and asks, so why did we spend this money and why the solution and who is the vendor? We shouldn't have to depend on someone's memory, or institutional memory is what I like to call it. So we should be able to reconstruct all that information, all the assumptions, the alternatives, the judgments, and the authority that led us to that decision. So decision confidence comes from how the decision was constructed, not simply from how much information was collected. And so a capital decision should be explainable without the decision maker in the room. And I actually really love this particular module. So one of the things that Proposabit thinks about differently is what happens after a capital decision has been made. It's not enough for, the people sitting in the room to understand why they chose a particular path. The decision should be constructed so that someone who hasn't or wasn't in the room can understand how they got there. And that's where the decision traceability becomes important with Proposabid. Think about how many people can influence a major capital decision. You may have the engineers, contractors, the property managers, asset managers, and ultimately ownership deciding whether to commit that capital. But those roles aren't interchangeable, right? So the engineer may provide expertise without owning the investment decision. A contractor may recommend a solution while also having a commercial interest in said solution. The property manager may understand the operational impact, but not um, but does not have the authority to commit that capital. So ultimately, someone has to exercise judgment and own that decision. So that's what we mean by authority boundary. We want to understand where expertise ends, where recommendations begin, and where decision authority sits, and who ultimately owns that risk. Then we want to preserve the decision as traceability. So, what information did we rely on? What assumptions did we make? What alternatives did we consider? What trade offs did we accept? Whose judgment influenced the recommendation in the first place? And why did ownership ultimately choose the path that they chose? So, if an investor, a lender, a board member, or even a sponsor comes back 2 years later, the rationale shouldn't have to be reconstructed from someone else's memory or buried across emails, proposals, Google Drives, or meeting notes. A defensible capital decision should be able to tell its own story regardless of who's available and who's not. And so that's the difference between simply documenting a project and creating the decision traceability that comes along with it. So why do capital projects stall? Okay, I can see that now. So why do capital projects stall even when we have the engineering reports, multiple proposals, pricing, and qualified people involved? From Proposabid's perspective, one reason is that some of the most important variables influencing that decision aren't always the most visible ones, right? The scope, the price, the schedules are relatively easy to see. But underneath those numbers may be assumptions, exclusions, the unknown conditions, the risk, the ownership responsibilities, right? And then the trade-offs that someone ultimately has to judge. And so we call these judgment variables. For example, two contractors may both propose $1 million solution, but one assumes the owner will complete the electrical work separately. Another may include it. One may carry a certain site condition as part of its price, while another excludes it. And one solution may have a lower initial cost, but transfer more future risks back to ownership later on. So until those differences are made explicit up front, we're not simply dealing with a project uncertainty. We're asking decision makers to exercise judgment without clearly seeing all of the variables they're actually judging. So that's when decision friction starts. Questions start to multiply, pricing appears to be inconsistent, recommendations start conflicting, and then the additional due diligence is required and approvals slow down. So we don't pretend we can eliminate every unknown or every risk. Instead, we make the variables that could materially influence the decision visible enough to be evaluated intentionally. So the goal isn't to eliminate risk. The goal is to prevent hidden variables from making the decisions for us. So building capital confidence. More information does not create confidence if the information cannot be compared. So one of the most common assumptions in capital procurement is that three bids means three choices. And that once we receive three bids, we have three alternatives we can compare. But from Proposabid's perspective, that's not necessarily true. Three contractors can receive the same general project information and submit three completely reasonable reasonable proposals, right? And still be proposing three fundamentally different versions of the project itself. So the scope may differ, right? One contractor may include work, another excludes. One may assign certain responsibilities to ownership. They may they may be making different assumptions about existing conditions, the scheduling, the warranties, the life cycle requirements, or the risk. So proposal A is 800,000, proposal B is 950, and proposal C is 1.1 mil. We can't assume proposal A for the 800K is actually the least expensive, or even that these three numbers are directly comparable. So before price can tell us which option is better, we first have to understand what each price actually represents. So what are we actually comparing? And this is where input equivalence becomes important within the decision architecture here at Proposabid. The objective isn't to force every contractor into an identical proposal. The objective is to make the decision inputs comparable enough that ownership can see where the alternatives are equivalent, where they're actually different, and whether those differences could materially change the outcome. We normalize the scopes, we surface the assumptions, we align the responsibilities, we identify the exclusions, and compare how risks is actually being allocated. And these are the things that you can do also. So once that's done, price starts to become decision useful. And sometimes that appears to be the lowest bid. And once you do the usefulness, the lowest bid no longer represents the lowest total investment or the best allocation of risk. So without input equivalence, we may think we're comparing three prices when we're actually comparing three different projects. So the capital confidence doesn't come from having more proposals. It comes from understanding what those proposals actually mean. So 6 questions before approving a major CapEx. I know this is a lot to read, so I'll just summarize all this for you. So if you take one practical tool away from today's discussion, I want it to be these 6 questions. Well, there's more than six, but before significant capital is committed, ask whether the decision itself is actually ready, whether the decision itself is actually ready. So first, have we framed the decision correctly? Are we clear about the problem we're solving before we start evaluating the solutions? The second thing is, are we comparing the equivalent alternatives, right? So three bids don't necessarily mean three comparable choices. We need to understand the difference in scopes, the assumptions, the exclusions, the ownership responsibilities, the risk before the price comparisons are made so that they become meaningful and useful. The third is what variables could change these outcomes. So, what assumptions, unknowns, and the trade offs or conditions are we asking someone to exercise judgment around? And those variables don't necessarily have to be eliminated, but they should be visible. And then fourth, who is advising and who is actually deciding? Engineers and contractors, the consultants, the property managers, and the asset managers may all contribute a level of expertise, but recommendation authority, decision authority, and risk ownerships are not necessarily the same thing. So those need to be separated. And fifth, can we trace how we got here? If someone who wasn't part of the process asks why this particular solution was selected, could we connect the information we received, the alternatives we considered, and the judgments we made, and the rationale behind the final decisions? Could we connect all that together to reconstruct regardless of who was there or not? And then finally, do we have enough confidence to commit the capital in the end after we've done these 6 questions? Now, notice I did not say certainty. I like that word, certainty. Certainty. So decision architecture isn't about eliminating every single unknown or guaranteeing a particular outcome. Capital projects will always involve risk. The question is whether we've created enough clarity around the decision to intentionally accept the risks and trade-offs that remain. So that's the distinction I want you to remember, which is a project can absolutely be necessary and still not be decision ready. So let's bring it all together. So I want to leave you with a slightly different question. Think about how major capital decisions are being made within your own properties right now that you own, operate, sponsor, or invest in today. So, most organizations have processes for executing that project. They know how to engage the engineers, solicit the bids, hire the contractors, approve invoices, manage the scheduling, and oversee the construction itself. But what is the architecture for the decisions that happen before all of that moves, before any of that capital is committed, before all those pieces are put in place? How is the problem framed? How do you know that the alternatives you're comparing are actually equivalent? What are the assumptions, the unknowns, and the trade-offs? Is it clear where technical expertise ends and decision authority begins? And if someone comes back 2 years later, can they reconstruct why that particular decision was made in the first place? If those answers primarily live in someone's inbox or meeting notes or personal memory or a personal feeling or interpretation, then the organization may have a project process, but it may not have a decision architecture to construct from. And that's the important distinction because some of the most consequential risks in a capital project can enter the project before the hammer is swung or construction even begins. So, great capital decisions are intentionally built, right? So, this is the shift I'm asking you to consider because you can hire good people, collect multiple bids, or allocate and accumulate enough information. And that's great. So we frame the decision before we start solving it. We establish enough equivalence between the alternatives to understand where we're actually what we're actually comparing and where we're actually comparing it to, right? So we make the assumptions, exclusions, the risks, and the trade-off explicit so that hidden variables aren't making the decision for us. Establish clear boundaries between technical expertise and the recommendation authorities, and preserve enough of the rationale that the decision can be understood and reconstructed later on. So, if today's discussion has you thinking about how capital decisions are currently being made across your portfolio, or whether your organization has a defined decision architecture before major capital is committed, that's exactly the conversation I have with owners and sponsors through Propose a Bid. So I want to thank you for your time, and I'm open to questions.
Beautiful. Thanks very much for that. I have some questions of my own that I was taking while you were presenting, but
Yeah,
for those of you in the audience, please use the Q&A feature to ask any questions or share any thoughts that you have, and we'll share those. So, a question I had, let's see, where is it? So you emphasized a need to optimize the decision-making framework, not just have a decision-making framework but to really make it like very crystal clear about how you are making these decisions, among other things that you presented on. What do you see are the variables or influences that exist, either with just an individual sponsor or situation or with a GP team that compromise not just the CapEx decision, but just sort of that decision-making framework to begin with?
yeah, that's a great question. So, what are the variables that I see that compromise the decision-making framework? regardless of who's actually making those decisions. I think one is to first is who is actually responsible for the authority of the decisions being made to begin with, right? So ownership could be putting the responsibility on to the sponsors to make ownership decisions. And I think we experience that even in our day to day. The second piece is not having the correct information in order to be able to make the decision in the first place. So the compromise or the compromising positions are is that one, what are my real alternatives? What am I actually buying on each option and what assumptions am I accepting? And most people aren't being able to separate those things out. They're just looking at the issue as a repair issue versus a decision issue. When the issue itself is not the fact that you need to replace the roof, the issue itself is that you want to sell in 3 to 5 years and you need to do a complete multifamily roof replacement in order to bring up the value so that you can get it into a B class environments for workforce housing or whatever the case may be to be able to sell it for the 20, 30, or 500 million that you're looking to get from it. That is the decision that you need to make. It's not to actually replace the roof. So you have a capex that you allocate that money for that's going to be spent anyway. So you made the decision that the money is going to be spent, but why is it being spent is probably the most compromising thing. You have to understand that particular piece. I mean, we all go out and blow money all day long. We don't know why we did it.
All right, I
And,
like.
at a larger scale, we're doing the same thing, just with other people's money.
We have a lot of investors who are in syndication, so they're invested passively into real estate deals. How can kind of the information that you presented today be utilized by passive investors?
Yeah, the information I present today can be utilized by passive investors by just basically taking those 6 questions that I have and then applying it to their own portfolios. But also probably creating a structured framework around their decision in the first place and then passing it off to their asset managers if they're or their syndications themselves. Now, are syndications really going to listen to that because you have a giant pool of people that are making those decisions for you? No, but or yes, and you by you asking and posing these questions to begin with of how is my money being spent and how can I increase the NOI and how are these improvements or how are these repairs or how are these renovations being done based on those 6 questions? In that you don't really have authority.
Yes,
So
it's
yeah.
almost, it seems like because you're right. I mean, you are investing passively. That's the nature of a syndication. So it's almost like you want to make sure that there's a decision-making framework in place as in and make that part of your due diligence process to begin with before even investing.
Yeah, and then most aren't going to have that kind of framework to begin with. So then what do? You just kind of you trust that that the sponsor is doing what they're supposed to do, the syndication is doing what they're supposed to do, but posing these questions up front and then requesting those answers to be given will actually probably make the sophistication. It'll put folks on notice that you're understanding how your money is not being spent or being spent.
That makes sense. For again, thinking about like GP teams or teams that already have uh, folks in place who are making these decisions, whether it's like a
Mhm.
facilities director, for example, how does propose a bid's decision making framework kind of integrate with that? Like how does it
Mhm.
support that?
Yeah, we're saying we already have a facilities director and an internal team that handles our capital projects. So why would we need propose a bid? Yeah, that's a fair question. And in many organizations, the facilities director or internal capital teams is doing tremendous amount of work. So the distinction is where their responsibility usually begins and what, are they being asked to own? So most facilities and constructions and projects teams are structured to operate downstream. right? They're focused on getting the work, the scopes, the price, the scheduling, the award, and the execution done. They're managing the vendors, the contractors, timelines, and budgets. But what Proposal Bid is focused on is the decision layer before execution is even committed. And we also source the bids and estimations. We also are able to normalize the bids and create the traceability. We're a complete package in that way. But before we ask who is doing the work, we're asking, have we clearly defined the decision? Are the alternatives actually comparable and what assumptions are driving each opinion? Most facilities teams aren't doing that, right? And now, can an internal team do all of that? Absolutely. The better question is that actually how organizations are designed in their process, right? So because people are talented does not necessarily or automatically mean you have the consistent decision architecture. So if that facilities director left tomorrow, could someone else look at the file and clearly understand why that $5 to $7 million capital decision was made? Could they see the alternatives considered and the assumptions? Could they see the risk to ownership or the rationale for the final decision? So if the answer is yes, then you may have already, created a strong decision architecture process with input equivalences. But if the answer is no, then what you may have is excellent people doing excellent work, but the decision process itself is still largely dependent on the people, right?
And even if you had, like you said, even if you had that decision making framework in place, if it's stuck in someone's Google Drive or it basically lives in the mind of that one person and that person leaves the team, then uh, being able to defend those decisions is kind of lost on the remaining members of the team because they didn't have that knowledge because it was all kind of relying on one person's shoulders.
Well, what you're saying is so if it's a decision architecture, architecture doesn't disappear. It's structure, regardless of who's there,
Hmm.
right? So if someone disappears and there's no understanding of why the decisions were made, you don't have architecture or infrastructure.
Mm,
And that's the
makes
decision. That's the difference, is that you need to have structure in place, like plumbing, like road work. So what? There's no cars, but the road work is still there for people to use and be dependent on. If information is stored in obsolete places and no one can reconstruct and no one can understand why a decision was made, then you don't have architecture to begin with. You just have a bunch of different conversations that have been piecemealed together.
mm.
Having an architecture means having a decision framework and architecture means that it stands regardless of who's available and who's not. And it can be duplicated and replicated throughout not only your properties, but the entire industry. And that's what Proposal Bid is doing.
Okay, good distinction. That makes sense.
Mhm.
Those are all the questions I have. I'm
Okay.
gonna check really quickly. I don't see any other questions from the audience.
Sure.
But if you don't mind, could you throw up your, I think it was the last slide, it had your contact
Oh,
information.
sure. Yeah. Let me get that. Man, did I close it out? Sure. Second. Beginning. Yeah. Can you see that?
Yep, perfect.
Oh,
Um,
I can.
so
Yeah.
what's the best, actually, I was hoping to see contact information. What's the best place to reach you if anyone has any questions and or they want to learn more about either the presentation today or propose a bid specifically?
Yeah, you can reach me at proposalbid.com/about contact. Uh,
Okay.
I have a business phone. Um, I guess I didn't put that in there. Do you want me to throw it in the chat?
Yeah, please.
Okay, perfect. Okay. I want to thank everybody for attending. It's been amazing. Thank you, Matt.
Yeah, definitely. I appreciate you being on here today, and I appreciate everyone for carving out some time on your Thursday morning or afternoon, depending on where you're joining us from. Radivia, thanks very much for carving out your own time,
Thank you.
and for our clients who like to tune into our regular Thursday webinar series, please look out for the next one next week. But again, thank you for everyone for joining us, and we'll see you on the next one. Have a good day. Bye bye.